Top 30 Key Facts about the URA ETF, Expert Insights and Market Impact. What does the URA ETF primarily invest in? Answer: B. Uranium mining and production companies. Explanation: the URA ETF focuses on companies involved in the uranium industry, including uranium mining, production, and related activities. It aims to track the performance of the Solactive Global Uranium Nuclear Components Total Return Index. What type of ETF is URA? Answer: D. Sector ETF. Explanation: the URA ETF is a sector ETF that specifically targets the uranium sector, investing in companies involved in uranium mining and production. Which index does the URA ETF track? Answer: C. Solactive Global Uranium and Nuclear Components Total Return Index. Explanation: the URA ETF seeks to replicate the performance of the Solactive Global Uranium and Nuclear Components Total Return Index, which includes companies involved in uranium and nuclear components. How frequently does the URA ETF rebalance its portfolio? Answer: B. Semi-annually. Explanation: the URA ETF rebalances its portfolio semi-annually to ensure it accurately reflects the underlying index's composition and weightings. What is the primary commodity focus of the URA ETF? Answer: C. Uranium. Explanation: the URA ETF is specifically focused on uranium, investing in companies related to the uranium sector, including mining and production. What is the main risk associated with investing in the URA ETF? Answer: C. Commodity price risk. Explanation: investing in the URA ETF exposes investors to commodity price risk, as the ETF's performance is closely tied to uranium prices and the overall uranium market. Which of the following is not a common holding in the URA ETF? Answer: B. Nuclear power utilities. Explanation: while the URA ETF invests in uranium mining and exploration companies, it does not typically include nuclear power utilities in its portfolio, as it focuses on the uranium supply chain rather than end users of uranium. What can cause significant price volatility in the URA ETF? Answer: B. Fluctuations in uranium prices. Explanation: the URA ETF's price is significantly affected by fluctuations in uranium prices. Since it is a sector-specific ETF, changes in the commodities market can lead to notable volatility. What does the expense ratio of the URA ETF represent? Answer B. The total annual fees expressed as a percentage of the fund's average net assets. Explanation: the expense ratio reflects the fund's annual fees as a percentage of its average net assets, covering management fees and other operational costs. How is the URA ETF typically traded? Answer B. On major stock exchanges. Explanation: the URA ETF is traded on major stock exchanges, making it accessible to investors through standard brokerage accounts. What is a potential benefit of investing in the URA ETF? Answer B. High liquidity and ease of trading. Explanation: the URA ETF offers high liquidity and ease of trading because it is listed on major stock exchanges, providing investors with the ability to buy and sell shares relatively easily. What impact can geopolitical events have on the URA ETF? Answer C. Negative impact. Explanation: geopolitical events, especially those affecting uranium-producing countries or global trade, can negatively impact the URA ETF due to disruptions in supply and market uncertainty. What type of investor might be most interested in the URA ETF? Answer B. Aggressive growth investors. Explanation: the URA ETF is likely to appeal to aggressive growth investors interested in the high-risk, high-reward nature of the uranium sector, rather than conservative or income-focused investors. What factor can drive demand for uranium and affect the URA ETF? Answer B. Increased demand for nuclear energy. Explanation: increased demand for nuclear energy can drive up uranium prices and positively affect the URA ETF, as higher demand for uranium in energy production influences its market. What role does the URA ETF play in a diversified portfolio? Answer B. Adds diversification through uranium sector investments. Explanation: the URA ETF adds diversification by providing exposure to the uranium sector, which can be a unique component in a diversified investment portfolio. What is a significant consideration when investing in the URA ETF? Answer C. The overall health of the global uranium market. Explanation: the performance of the URA ETF is heavily influenced by the health of the global uranium market, including supply and demand dynamics and market conditions. How does the URA ETF fit within the context of environmental, social, and governance (ESG) criteria? Answer B. It may align with ESG principles due to its support of nuclear energy. Explanation: the URA ETF could be considered to align with certain ESG criteria because nuclear energy is seen as a low-carbon energy source, potentially supporting environmental sustainability. What type of market condition is typically favorable for the URA ETF? Answer: C. High uranium prices. Explanation: high uranium prices are typically favorable for the URA ETF as they can lead to increased revenues and profits for uranium-related companies in the ETF's portfolio. How does the URA ETF's performance compare to a broad market index like the S&P 500? Answer: C. It can significantly deviate from the S&P 500 due to sector-specific factors. Explanation: the URA ETF's performance can differ significantly from the S&P 500 due to its focus on the uranium sector, which is subject to different economic and market factors than the broader market. What is a typical way the URA ETF generates returns for investors? Answer: B. Through capital appreciation. Explanation: the URA ETF primarily generates returns through capital appreciation, as the value of its holdings in uranium-related companies increases. Which regulatory body oversees the URA ETF? Answer: C. Securities and Exchange Commission, SEC. Explanation: the SEC regulates and oversees ETFs, including the URA ETF, ensuring compliance with securities laws and regulations. What is the typical volatility level of the URA ETF compared to traditional equity ETFs? Answer: C. Higher. Explanation: the URA ETF generally exhibits higher volatility compared to traditional equity ETFs due to the inherent risks and price fluctuations associated with the uranium sector. How does the URA ETF handle dividend payments? Answer: D. It distributes dividends quarterly. Explanation: the URA ETF typically distributes dividends on a quarterly basis, reflecting any income generated from its investments in uranium companies. What is a key factor affecting the performance of uranium mining companies included in the URA ETF? Answer: C. The regulatory environment for mining. Explanation: the regulatory environment for mining can significantly impact uranium mining companies, affecting their operational costs and overall performance. What might be a reason for an investor to avoid the URA ETF? Answer: B. High expense ratio. Explanation: some investors might avoid the URA ETF if its expense ratio is perceived as high compared to other investment options, as this could erode returns over time. What is the typical investment horizon for someone considering the URA ETF? Answer: B. Long-term hold. Explanation: the URA ETF is generally suited for long-term investors who are looking to gain exposure to the uranium sector and benefit from potential long-term growth in uranium prices. What factor could negatively impact the URA ETF in a global economic downturn? Answer: B. Falling uranium prices. Explanation: in a global economic downturn, falling uranium prices can negatively impact the URA ETF, as reduced demand and economic uncertainty may lead to lower prices for uranium and related stocks. How can investors gain exposure to uranium besides investing in the URA ETF? Answer: A. By purchasing uranium futures contracts. Explanation: investors can gain exposure to uranium through futures contracts, which allow them to speculate on the future price of uranium directly, apart from ETFs like URA. What is the impact of technological advancements in nuclear energy on the URA ETF? Answer: C. Positive impact due to increased efficiency and demand. Explanation: technological advancements in nuclear energy can positively impact the URA ETF by increasing the efficiency and demand for nuclear power, thereby boosting uranium prices. What should investors consider when evaluating the URA ETF's suitability for their portfolio? Answer: A. The ETF sector focus and alignment with investment goals. Explanation: investors should consider the URA ETF sector focus, uranium, and how it aligns with their overall investment goals and risk tolerance, rather than just historical performance or expense ratio alone.